Yeah, well, there's a few things on the move still. So this is the S&P futures, the real market, as I like to call it. This is a daily. So I guess a couple of interesting things have happened. One is I do look at the moving averages, like the 20 and the 50. Just a simple one, whatever. It doesn't cross over very often, right? Um, So it's crossed over here. Obviously, you can see it's crossed over there. We start of a big bear move, crossed over here. Great buying. Crossed over, there and there. Seller buy it back. So this one here, obviously, it doesn't mean that it's going down. It means that it has gone down, right? So there's that. I guess as far as my targets, I'm still seeing like a gap in here where it's basically wedding caked, right? It's kind of, as Sarah Lee would say, layer up on layer up on layer. It's kind of, it's at this level here, it's at this level here, it's at this level like, through here, it's at this one through here. It kind of shows up more clearly on different time frames, but you can really see it's a bit more clearly here on the 4 hour. Like there's a level in there, there's a level in there, there's another one down here, in that kind of range. There's another one here, like in this kind of range, and there's another one here. So it's totally wedding caked up and wedding caked down. And if it keeps going down, right, then the next level in the cake is there, and the next one is down there. I'm pretty confident it's going to go here. There, I guess the odds are increasing given the price action. It still is recovering from that 17th and 18th price action, or the big sell in the market that I've talked about in previous videos, where back in May, June, July and August, on the 17th and 18th trading days, there was a seller in the market of good volume. They disappeared at the close of business on the 18th, and the market sprang back. It wasn't a flash crash. It wasn't related to options. It's not the third Friday of every month. It's the calendar days, the 17th and 18th, or good business days. Of course, here, this is where the selling happened. And as I said, 2 weeks ago now, like before that date, the dilemma here is when they do that selling, which they did, then it triggers this technical level here, triggers those moving averages. That's like a 50. A lot of people watch that, whether you like it or not. And that's going to leave the market in a dilemma, right? Which is, with the seller out, are the buyers just going to bounce back like they have, like here, right? That's the 19th. This is again the 19th. That's good business days, next days. Or is the technical damage done, and is that going to cause a ruction? So we're still in that arm wrestle, right? Like the selling has happened. The seller's gone, that seller that's triggered it. We've now broken a dilemma at the technicals, and it's the dilemma. I do think there's a few planets aligning that think that, to me, that this hole is going to get filled, and if not, that one. We're going to also look at the Fibos, which I do, pay reasonable attention to. You can see how, like, this is the Fibos from the this leg. Let me just zoom in a different color, right? So these are the Fibos from this leg, and you can see that this first level, which I had marked, that's right on that 23, and the second level that I had marked is on the 38, which corresponds to this bigger move and also that gap. And so there are some of those. That's what technical analysis is about. It's about pattern recognition, right? And in the vain hope that the patterns will kind of repeat and perpetuate. So in terms of the pattern recognition, this is a good line because it's a 23 retracement of there to there, which is a shallow retracement, right? That's basically the minimum one according to the Fibos. Or it's the shallowest retracement for the whole move if we go down here. That one, obviously the 38 from there to there. So that's why I think, and it's got the gap there that was never filled. That's why I think that one is a likely target for the S&P. And when you look at our market, you know, it's a similar kind of story. This is the Aussie market, where this is in that 23.6 retracement from back here. And again, we are still in this situation of mimicking the pattern here. Again, technical analysis, it's about pattern recognition in the vain hope that these patterns will repeat. But this is a topping pattern that we have seen before and on previous occasions. And it is showing very expected resistance at the previous high back here pre-COVID. And the target is the gap here, which is similar gap in the US market, which in the Australian market, you know, corresponds to some of that resistance and support before it broke through to that high. We're still unfolding lower. Look at the 4 hourly, which I like. That's my favorite one. You know, it is still unfolding lower. This retracement, as I said before, is heavier than it actually was, and the reason for that is there's like 100 points of dividends which dropped out of the futures market, dropped out of the cash market, but the cash market held its own, and so the futures rallied. In the cash market, it goes like that. That is one reason we're looking at the cash and looking at the futures. We do need to look at both, not because the cash is the real market, but because the cash includes the dynamic for dividends that the futures market doesn't. I'm still short the Aussie market here. There was a great opportunity down here, which I missed because I was with the kids in the park, which is down here, where it was dipping down, and I had a call level set with my broker. I think it's down at like 71.40 or whatever. Oh no, he sent through a thing saying, you know, it's heavily oversold, which was, take a look. I took a look and said, oh mate, I think it's got another leg down in it, right? And I set the call level at 7100. Anyway, it dipped down there, didn't quite reach it, got to 7112. My call level was just a bit too aggressive. One thing that I have learned over time is setting call levels and stop levels on even numbers is a disaster, right? You know, I really should have set it at least at like 7110 or 15, right? Somewhere above it, so you get a bit of warning that it's going to hit it. Because when it's a good chance, there's a lot of people looking at those even numbers. So that's why that's one of the reasons why I didn't get there. Anyway, so I didn't manage to pull it back. So I rode it back here to 7300. Didn't stop out. I actually squared up my S&P futures at that point, because you can see here in the Aussie market, just did this jubbing around at like 7200 last night, and then it broke, right? And when I was looking at the futures market in the S&P, it had the similar kind of price action, like all around here, right? This is the same kind of time of day, and you know, the US market, although our Australian market had sold off and then came screaming back, the US market hadn't moved, and I thought it's probably going to pop, right? So I squared up, bought back the my S&P futures here, like this afternoon, and it popped, which is good. But now in the open, as well in the open, and also as Europe has come through, it's softened. So I'll probably reshort those ones there and lose about 10 points or something. I bought them back at like 74. So I'll sold them back like I might get set on 70. So as I said, there are a few things moving. The Aussie dollar has broken this. It had broken down that 72 level, right? And it's come back to test it. That is a bit of a classic it's a bit of a classic warning sign to watch very carefully, whether it's a false break. I may well short another one. I did sell out another one in here up at 73, which I talked about the other day. It's come back, broken that support, come back to retest it. If it fails this one, then it really is on for young and old. It'll go down at least to there, if not further. I would say I'm going to stay short there. I will be watching it closely tonight to see if there's a break there. So that's the markets. The US one. Let's have a quick look at the cash market. As you can see, they're those dates that I've been talking about. Here really is the toot UR. I don't know, I want to use that word. The high, low, low, stall, coming back down. Big warning sign to me, that one. To see what it's going to do. Excuse these lines that are a bit out of behaviour. There they go. And it really is still deliberating, same as the Aussie market. This top here, is that going to play out as it has in the past? There's, as you can see, the gapping action there. The gapping action here is very much indicative of uncertainty. It's broken technicals. The buyers are back after that 17th and 18th selling. That's when it finished. The 17th and 18th was a weekend. The 18th and 19th was a weekend, from memory. So it's still in this deliberation phase. It is just hanging in there. The other thing that is interesting to watch, of course, is the dollar index. This is a chart I've been looking at, and I really haven't been able to make head of tail of it because it just does these few things. It oscillates there. This is on like a daily time frame, and you can see it is broken up, right? It oscillates here as well, like on a bigger time scale. And if you look back even further, it does the same. It's done a big oscillation here. So I got no idea really what to make of this, how it's done a big oscillate here, another one there, another one there. It just, I guess it is the ultimate signal of something that really is, as a lot of people will refer to as a risk on, risk off thing, because it just does, oscillate on these big levels. I've really got very little idea where this is heading in the long term, apart from, I guess, my roughie, being a gambling man, which I am, of course, is that kind of range there. We'll take it back up to like the middle of there, and I do think that is, that is kind of reasonable if you kind of look at this big oscillation. It could come back, it could spike up to here, but that 90, I guess that 99-ish kind of level is 98 is probably a fair level for it to come back to, and that would, I guess, if you take it from that point down to the low, that'll take it back up in there, right? 100. I guess I will make a note of that kind of level now, because I guess there is that definitely level through there when you take out the spikes. We'll put that back in. There is a level, here, which I've kind of got marked before, which is really probably a little bit higher when you take into account the resistance there. That's a bit of a spike. Resistance there, and then if you look at that level just to the low there and up here, it does start taking up into the higher bit of that range. I guess you can force it to fit. But that could be where it headed, and I guess if you look at it like when it had this dip down, where did it go? Bust the range, it goes up to the top, right? Same thing, like this happens in a lot of range trades. When it busts the top, it heads right back to the other side. When it busts the top, it heads right back to the other side. So this one, I do think that it's headed up, and it could be quite a move if it goes back up to this range. This is a range going back to 2015. So it is you know, it is quite a range, and you can see here, when I look at like my favourites kind of here, there is that, you know, it's kind of, that is the range, excesses, 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 excesses. This one, if it follows the pattern that we've seen, it'll come back here. I did have this area marked in here as a gap to fill, but it has not sustained that breakdown, and it's done some glorious double head and shoulders. Who knows what that is? But it's got like a bit of a double bottom here, and so with that, the fact that it's rejected here, it's found support there, I think it's going back up here, so it could be quite a move. So I'm short the Aussie, that's because I'm Australian, but you know, really, for all intents and purposes, I could just as well be long at the dollar index. Look, that's about it. Have a good day. Ciao.